Federal Reserve widely expected to keep rates where they are. Today's meeting following those 2 days. Former Dallas Fed President Robert Kaplan is now vice chairman with Goldman Sachs. And it's good to see you, as always, Rob. Just start with just what keeps you up at night. Would you say that and I'm talking about tariffs, is it the inflationary impact or the growth worries or the recessionary impact of tariffs that you think worries you more? Is it exactly equal?
The one thing that makes me feel a little better is that 77% of the U.S. economy is services, not goods. About 12% is manufacturing, another 12 or 13% is imports of goods. So I think the economy, if we get some clarity, can withstand this from a growth point of view. We're clearly slowing. And if we don't resolve some of these tariff issues, we're going to slow more. But I'm more probably concerned about the cost push and how that flows through to the economy. And again, that's going to be a function of whether we're able to de-escalate with China and de-escalate with these other countries. And we may be able to do that. So what I'm seeing in the economy right now is slowing, but it's pronounced in shipping, it's pronounced in hotel, leisure, tourism. But I hear from other clients, business is it's not great, but it's hanging in there. And I think that's where we are right now.
That sounded like if you take that to the Fed and say, here's what I'm seeing, that would be a reason not to cut right now. I think there's I've heard the other side is that, inflation, some people think is a monetary phenomenon. And since it's a second derivative, it's not just that first price hike that you'd see. It has to continue and, go up 5, 6, 7% on top of another 5, 6, 7%, on top of another 5, 6, 7%. And that would be, I guess, a trade war, a tit for tat trade war. So sometimes I have trouble seeing the inflationary side of things, and I worry more about the growth side, which would argue for a cut with oil at $60.
Listen, everything I've ever read and studied on tariffs, and Texas is one of the largest exporting states in the country. Tariffs tend to slow growth, and they make prices stickier, and so that's why this has been a tricky thing for the Fed to handle.
Right, it's like the worst. I mean, those two things that you're just describing stagflation. So, when do you think that because there's been such pressure from President Trump, do you think that makes Jay Powell less likely to cut in the future?
No, it doesn't, and it shouldn't. And I think Jay Powell's got two objectives here. One, for the press conference, is to jawbone and make clear that the Fed will remain vigilant in fighting inflation. So why is he doing that? Because he doesn't want inflation expectations to get unanchored. And what I'm seeing actually in the economy with consumers pre-buying, with businesses starting to put surcharges on bills, I think you're seeing inflationary expectations get untethered. He wants to control that. And that will set the Fed up to be able to assess conditions and into the June meeting, into July meeting, and get prepared to cut. But it's going to be easier, ironically, to be able to cut in later meetings if he keeps inflation expectations anchored now. So he may jawbone tougher, even though I think he's keeping all his options open, and I think they want to get in a position to do something, but only if it makes sense.
We did see a claims number that, I don't know, but then we saw a good jobs number. No real worries there. What's the next? When do you expect to see something if there is a problem? And the same question for an inflation print. What's the next thing that will let us know what's really going on?
There's a couple of unusual things going on right now. Normally, when you see a first quarter GDP number that's this weak, and I know some of it was due to excess imports, but it was still weak. When you see GDP slowing, you would expect unemployment to start moving up or spiking up. You may not see that this time because the labor force is still very tight. And the lack of immigration, the deportations, the uncertainty about the status of millions of undocumented workers who are in the workforce, I think it's going to keep the labor force tight. So I actually wouldn't shock me if the unemployment number doesn't move up the way you normally see in a slowing. And so then the second thing I'm looking for is less, honestly, in the data. I'm looking to talk to contacts about what their behavior is, what they're seeing in their business. And what I'm hearing right now, and I think that precedes the data down the road, what you're hearing is they're worried about empty shelves coming in about 4 to 6 weeks. That's why this de-escalation this weekend with China could be very significant. It's ironically not as critical we come to a trade deal with China. I think it is critical that we roll back some of these tit-for-tat tariffs so we can get trade flowing again. Otherwise, what I'm hearing from businesses, you're going to see a lot more stocking out. It's going to particularly affect small businesses who really don't have other options. And so I'm watching the China discussions carefully. And then the other thing is I'd love to see a cooling off of preemptive buying and also the surcharging that we're currently seeing. And so as I hope, as we see some trade deals and more clarifications, you'll see the average tariff rate start to cool down, but the jury's out on that yet.
Yep. And you got all of Goldman Sachs. You can call anyone you want and find out what's going on. Hatzi said, whomever, it's the vice chair of Goldman, tell me what you're seeing. You can do that too, right? I mean, that's always that's
and
a good place.
We're talking about that, and we're talking to asset allocators around the world. We're watching this very carefully and trying to weigh how they position their portfolios.